If you're about to sell your company, the IRS is your silent partner, and they don't work for free. I see owners shocked every year when they realize they owe 20 to 37% of their sale to taxes. Sometimes it's even more with state taxes. That can mean millions lost in a single transaction. One way to tackle this is with a charitable remainder trust. You transfer your business shares into the trust before selling, allowing the trust to sell without triggering capital gains. Plus, you get a lifetime income stream from the proceeds. Combine that with an irrevocable life insurance trust, and your heirs receive tax-free benefits when you're gone. This isn't just theory. The ultra-wealthy have been using these strategies for decades. The problem is, most owners haven't had it explained to them before signing the LOI. If you're within 3 years of selling, grab our free guide, 5 Hidden Tax Traps for Business Owners, before you leave millions on the table.